Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and today we're going to be talking about all the dividend income I received in the month of June. I do know I'm a little bit late on this. I had some other videos planned first, but now I'm back in business and we're going to cover all my dividend income as well as any portfolio changes that I've had in the past month. As a reminder, if you do enjoy this type of content, please subscribe to the channel. It helps me out a ton. And with that being said, let's get right into my portfolio. Taking a look at my dashboard, we can see that I only have $29,127 invested. I say only because I haven't added any more money into my positions in the past couple months. My portfolio value is sitting at a record high of $39,777. That gives me an unrealized gain of 10,650% or a total return of almost 37%, which is absolutely ridiculous. Now in these videos, I always preface that in the coming months, I do expect this total return to go down. I think the market's going to swing up and down over the next year or so. And so I'm not going to be surprised if I do see a lower total return by the time we're back here next month. So far I've been proven wrong, but at some point it will be correct, unfortunately. Now I am optimistic in the stock market as a whole, but in the short term, I do think it's going to have much more swings than we have seen in the past couple months. The big reason I've been constantly pushing new highs in my portfolio is because the S&P 500 has been on fire the past year to date. And if we take a look at its performance on Seeking Alpha, we can see just that. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. Year to date, the market is up 16.72%. In the past year, it's up over 25%, not including dividends being reinvested back into those companies. If you look at their 52-week range, they are sitting right by their 52-week high, and they've basically been doing a new 52-week high every other day. Now, I have definitely enjoyed the ride so far, and I do hold a very large position in VOO, which is an S&P 500 ETF, so I've been very much getting rewarded for holding it. Taking a look back at my portfolio dashboard, we can see that I've earned $986.93 of total dividend income, and I have a yearly projected income of $712. I'm getting real close to that $1,000 mark on the dividend earned. I'm getting very excited to hit that soon. Now, in terms of portfolio yield, my portfolio yield is sitting at 1.79%. My yield on cost is at 2.44%. And that's because the price appreciation has been outpacing the dividend increases that I have earned. Now, I have had some questions, people asking me why I go for such low dividend yielding positions if I'm a dividend investor. The main thing is that I am an investor looking for total returns, but I do enjoy dividend income and it keeps me motivated in investing. I think you can both have total returns and dividend income. And just because you're taking one doesn't mean you have to trade off the other. For example, Google just instated a dividend, but I wouldn't say it's no longer a growth stock. It's still just a dividend growth stock, hopefully going into the future. Now, my cash position is sitting at $5,767. That's because I added $1,000 more this month into my cash holdings. I have it in a money market fund in my investment account. And when I find opportunities to invest, I will be using that cash in order to buy more positions. Now, taking a look down here, we can see my breakdown each year from 2020 all the way to 2024. So far this year, I've earned $255 with dividend income. And if we look back at 2020, I only earned a measly $12.45. So you can see how quickly it's all increasing. Now, I've already passed my 2022 dividend income of $191.87, and I'm going to be passing 2023 pretty soon. In terms of amount invested, I started off the year pretty strong, investing very heavily in the first 2 months of the year. Since then, I've cooled off, waiting for better opportunities to arise. Now, although my dividend income is small at the moment, we can see how quickly this graph is increasing. I'm expecting 2024 to end up significantly higher than 2023. And of course, going forward, it's only going to get larger from here as the dividend snowball picks up. Now, I'm going to try to keep this video as short as possible. We have a lot of stocks to get through this month. A lot of them paid me dividends, so we're going to be taking a quick look at every single one of those. So let me know if you do like this new, slightly different style of looking through my portfolio. So here we can see the My Pie section of my portfolio, and I'm not going to hit on it in this video. If you guys do want to see an in-depth analysis of what is in My Pies, you can check out my last video. I'll pin it right here, and you'll also have it at the end cards at the end of this video. But basically, it does have my allocations for my different pies that I like to break it down into, and it also shows my cash position versus my stocks that I'm holding. So jumping into my monthly breakdown section of my portfolio, we can see how much money I've invested each month since I started investing and how much I received in dividends in each of those months. So as we go from 2020 to 2021, you can see as it's getting more consistent, I'm starting to get more monthly dividend income. And now fast forward to 2024, we can see we're sitting here in June with $37.55 of total dividend income earned this month. Now, I do have conditional formatting to show me what my record month is, which is right now at $121.04, and we'll probably breaking that at the end of December in this year as well. Here we can see how much I've invested each month. So $2,500 in January, like I said before, I guess 0 in February, 0 in March, $590 in April, $90 in May, and then of course 0 in June once again. Now, taking a look at my monthly dividend history graph, we can get a better idea of how much I'm getting paid out each month and how it's growing over time. Now, yes, this is very sporadic, but that's because a large position of mine is both VOO and SCHD, and they both pay on a quarterly basis. So on those quarters that they pay, or those months that they pay, I should say, my monthly income is going to be significantly higher than the rest of the months. So here you can see that March and December are usually bigger months for me. So March, again, this year was pretty big, and I can expect the same thing for December of this year to be just as large. If we want to compare directly, we can see that in June of 2024, which is right now, I got paid $37.55. And if we go back to last year, we see I got paid $47.72. And the main reason this went down is because last year SCHD did pay on this month, but this year it's actually paying on July 1st. So it's just slightly missing that June barrier, which is not a big deal at all. Overall, my dividend income did grow significantly from last year in June. Now, to break down my monthly dividend even further, we can see here which companies have paid me a dividend this month. What I did is I filtered out all my holdings by the companies that paid me a dividend, which is 12 different companies. Now, instead of doing the dividends by the date that I received them, what I'm going to do is I'm going to do it by the highest gain all the way to the lowest gain. Let me know if you guys like this new idea. So in this case, my highest total return comes from Microsoft. It's up 99%, and the same thing for Google, up 99%, which is absolutely ridiculous, and they're going to be eclipsing that 100% barrier in no time. Microsoft has been a great company for me. If you take a look at its performance in the past year to date, it's up 24%. In the past year, it's up almost 40%, which is absolutely ridiculous, putting it near its 52-week high. Now, in terms of dividend, it does have 19 consecutive years of dividend growth with a 5-year growth rate of over 10% and a pay ratio of 25%, which is very healthy. In total, I have earned $20 worth of dividends from this company, and going forward, I'm expected to earn $12.18 per year. Microsoft paid out their dividend on 13th of June, the amount of $3.04, and I reinvested it back into the company to get 0.007 shares back. Taking a look at the second company, we have Google with total return 99.11%, and I got paid out $1.20 on the 17th of June. I reinvested it back into the company to get a measly 0.007 shares of Google back, but of course the dividend is low, so over time I do hope that it starts compounding better. In terms of their performance, they are up 36.44% year to date, which is one of the highest in the S&P 500. And in the past year, they're up over 56.55%, and I bought this company at a very good bargain. They don't have much to show for in terms of dividends. Their dividend growth history is 0 years, and that's because they finally just started paying out their first dividend ever at 20 cents per share. Now, I'm personally super excited about this. I never would have imagined that Google would start paying out dividends the next 5 to 10 years, but I'm very happy to have them paid out even sooner. Next, we have Visa, who did pay me a total of $1.05 on the 3rd of June, which amounted to 0.004 shares reinvested back into the company. Now, being near the top of my list, we can expect Visa to have some pretty strong growth, and this is one of my favorite companies in my holdings. I wish I would have bought way more when I first invested in them. Now, they're up almost 4% year to date, but they are down from their peak at around $290 per share earlier this year, and in the past 1 year, they're up 12.91%, which is still pretty strong. Now, where this company really shines is their dividend stats. We can see that they have 15 years of consecutive dividend growth with an almost 16% 5-year growth rate, which is amazing. Their pay ratio is under 25%, and their dividend yield is pretty low at 0.77%, but really puts them at the top of my chart in terms of dividend growth. In terms of how much dividend income I earn from this holding, it's not too exciting at $4.22 per year, so not too meaningful just yet. Coming in next, though, we do have Ford, which is pretty surprising in my opinion. It's up 31.4%. That's the main reason I've kept holding on this position. I only own 7 shares, which is a very small percentage of my portfolio. And if we look at the allocation, it's only 0.3% of my entire portfolio weighting. So I have considered selling this company on a few different occasions. However, over the length of time that I've owned them, they have paid a very good amount in dividends relative to the size of my portfolio, which is $13.25. This quarter, they did pay me $1.20 worth of dividends, which amounted to 0.098 shares reinvested on the same date as Visa, June 3rd. However, unlike Visa, Ford is not a very consistent holding. It is very cyclical in nature, and it constantly goes up and down in stock price. So year to date, it is up 6.86%, but in the past year, it's down 15%, which is not great to see. In terms of their dividend history, they have a very weird way of paying dividends out. They pay a constant amount of dividends per year, but then at the end of the year, they'll try to increase the amount of dividends so that it equals a certain amount of free cash flow per share. Because of that, their dividend growth is only 1 year, and their 5-year growth rate is at 0% with a pay ratio of about 31.75%. So even though their dividend yield is very high right now, I would not suggest investing in this for dividend growth because it's not a very consistent dividend growth company. The next company on my list is S&P Global. This is one of my favorite holdings in my portfolio. It makes up a pretty big position of mine at $1,828 per share invested with a current value of $2,285. Looking at my gains, I am up over 24%, almost 25%, and my dividend earned so far has been $17.26. Now, on an annual basis, they are going to be paying me $18.35 per year, which I, of course, will be reinvesting back into the company. In terms of their dividend this quarter, they paid me out $4.58 shares, which I reinvested to get back 0.011 shares of the company on June 12th. This company has a very good dividend track record. It's actually a dividend king with 50 years of consecutive dividend growth history, an 11% 5-year growth rate, though its recent dividend hike was actually very low. The pay ratio is at 26.8%, which is extremely healthy, but the dividend yield is a little lower than some people might like at 0.8%. Taking a look at the performance, I have been pretty happy with this holding. It's up 3% year to date, and in the past year, it's up 13.43%. It is sitting close to its 52-week high, and its price to earnings ratio is a little bit higher than I would like. I think its GAAP price to earnings ratio is actually closer to 50, whereas its non-GAAP is about 31.91. Next, we have Target. I did buy this company as the price was dipping. I thought it would make a decent holding of mine in my dividend portfolio. Plus, I thought it would be a good potential at a turnaround play, which it has been so far, but not the most consistently. At some point, it was up over 45% for me, but now it's sitting at about 21% total return, which is not too bad. And it paid me out a pretty healthy dividend. So I've earned $27.80 in total from this position in dividends. Going forward, my annual payout is expected to be $27.74. And if we look at this month's dividend stats, we can see how much it paid me in the month of June. In total, it paid me $6.76, which I reinvested to get back 0.046 shares of Target. Now, just to show you what I mean about performance, in the past year, it's up over 10%, which is great. In the past year to date, it's up 2.2%, which is fine. But look at the past 5 years, we can see that it crashed a lot from its peak. Back in October of 2021, it was sitting at $254 a share. And fast forward to now, it's sitting at $148 with a low of almost $100 back in October of 2023. This company has very strong dividend history with 55 years of consecutive dividend growth, making it dividend king as well, an 11.44% 5-year growth rate, which is very good, though the past couple increases have been very slow. The pay ratio is sitting under 50%, which is okay. It's getting a little bit higher than what I would like, but it's still under 50, which is pretty healthy. And the dividend yield is sitting nice at 3%, which is better for people who like to hold higher yielding stocks. Coming in next, we have Union Pacific. Not so exciting. It's a company which I have been considering selling for quite some time now. It's up 21% almost, but at its peak, I think I was up almost 45% with this company as well, but it has since come down in price a decent amount. In total, I've earned $6.58 from dividends so far, and every year I'm going to be getting paid $5.35 just from holding this company, assuming that there's no dividend cuts. On the 28th of June, they were my last dividend payment of the month. They paid me at $1.33, which I reinvested to get back 0.006 shares of the company, which is not very significant at all. And just to show you guys what I mean by performance, this has been all over the place. So we can see that in October of 2023, it was down to almost $200 per share. It has since increased up to $254 per share, which is when I was up pretty nice in the position. And then, of course, it decreased once again back to where we are right now. Year to date, it's not doing so hot, down 8.33%. So I'm not so happy with its performance. And if we take a look at its dividend stats, it does have a very weird situation that's put itself in. It has 17 years of consecutive dividend growth, which is great. A 5-year growth rate of 9%. It's almost double digits, which is also very solid. And a pay ratio of under 50%, which is not bad at all, with a nice dividend yield of 2.3%. Now, my main problem with this is that they haven't increased their dividend in quite some time, and I'm going to show you guys what I mean right now. Now, if we jump into their dividend history, we can see that in the past 2 years, they haven't changed their dividend payment at all, and I'm going to explain to you guys how they're getting away with this. So in 2022, they were paying out $1.30 per share per quarter, and now fast forward to today, they're also paying out $1.30. Now, what happened was in 2022, they originally paid $1.18 for one of the quarters. So then fast forward to 2023, by paying out all of them $1.30, they've increased their dividend, of course. Now, the problem with this is I feel like it's kind of cheating because with no dividend increase in 2023, that means that they only have a limited amount of time to increase their dividend once again in 2024. So what I'm assuming is the next dividend payment will also be $1.30. And then the next one after that will have to be increased, of course, in order to keep their dividend track record going. Now, if they don't do that, that'd be pretty bad for shareholders. And I think a lot of people would sell this company just because of that. Basically, what they've done is they've taken the maximum amount of time that they can in order to not increase their dividends. So all the way in the first quarter of 2022, and then they're going to increase it in the last quarter of 2024. And it'll still count, of course, if they decide to do this, but I do think it's not the most efficient way and not the best way to reward your shareholders. And next, we have Home Depot, who paid me out on June 13th at an amount of $4.63 per share, which I reinvested to get back 0.013 shares of the company. They're actually a decent dividend payer of mine, and they paid out $24 so far in dividend payments with an expected projected annual payout of $18.64 per year, which is very solid for me. I do like this company a lot. My only consideration is whether I should keep Home Depot or Lowe's. I don't think it makes sense to keep both at this moment. So if you guys have any suggestions, please leave them down below. In terms of performance, they have done pretty well in the past year, up 7.65%, but definitely not near their peak right now. In the year-to-date period, they're down 3.45%, which is totally fine. They do have some fantastic dividend stats, with their dividend growth being at 14 years, 12.67% 5-year growth rate. I think their most recent dividend growth hike was over 7%, and their pay ratio is sitting a little bit high at 58.22%. And next, we do have what was recently the worst performing company within the S&P 500, Intel Corporation. If you want to see a video where I talk about why I bought more shares of Intel, check it out right here in the card that I'll put up. Currently, I am up over 13% on this position, which is not too bad at all, but my dividend earned has been very low ever since they cut their dividend. It has not been as plentiful as it was before. Going forward, it is only going to be paying $3, which is not great at all. And if we take a look at their dividend stats for this month, they paid me out 39 cents, which is basically nothing, and I reinvested it to get 0.013 shares of the company. Also a weird position of mine where I kind of have to decide if I'm going to start investing more into it or if I'm going to sell it at some point. Now, I'm going to skip the dividend stats of this company because it has recently cut their dividends, so there's basically nothing to see there. But if we look at their performance, it has been wild. Past year to date, it's down 36.28%. It was sitting much higher at the start of the year at $47 per share. And if we look at the past year, it's only down 1.51%, but still not great at all. Now, what I want to show you guys with this company is if we look at their 5 and 10 year models, we can see how far they've fallen from their peaks. So in April 5th of 2021, it was sitting at $68 per share, and now it's worth less than half of that at $32 per share. For our last three companies, we have United Health, Northrop Grumman, and 3M. Let's do them all together. So United Health is a big position of mine. It paid me out $10.53 worth of dividend income in the month of June, which I reinvested to get back 0.021 shares of the company. Now, on the other hand, Northrop Grumman is a much smaller position of mine, and it paid me out $2.08 for the dividend of June, and it reinvested to get back 0.005 shares of the company, which is not very meaningful, like I've said before. And then looking at 3M recently cut their dividend as well. So if you guys are seeing a pattern here, I have some companies that have cut their dividend, unfortunately, and it only paid out 76 cents per share, and it reinvested to get 0.007 shares back of the company. And 3M is one of those companies I've been considering selling for quite some time now, but just hadn't pulled the plug yet. Now, in terms of total return, they're all pretty low, 1.6% for United Health, which makes sense because it's one of my recent holdings that I bought this year. And then Northrop Grumman is down 0.3%, which is pretty unfortunate because I have been holding it for over a year now. The same can be said for 3M. I've been holding it for a while now, and it's down 11%, which is not great at all. In terms of dividend income, I've received the most dividend income from United Health, followed by 3M, and then Northrop Grumman Corporation. Now, both United Health and Northrop Grumman have recently given me some pretty good dividend hikes, which we can take a look at their dividend scorecard in a second. And of course, 3M has rewarded me with a beautiful dividend cut, which is very unfortunate. Going forward, United Health will be paying me $42.30 worth of dividend income per year, which is fantastic. And Northrop Grumman will be paying me $8.38 per year, which is totally fine. Now, the reason I did buy into United Health is because they have been dipping down recently into a price range where I felt comfortable purchasing them. So I bought them at around $500 per share, I think again at $485, and then I think I bought it one more time at $450 once it dipped that low. If we look at their total performance, though, in the past 10 years, they have done very well for themselves, which is the main reason I invested into this company. And taking a look at their dividend scorecard, we can see that they've been doing 14 years of consecutive dividend growth with their 5-year growth rate of 15.41%, which is amazing. Their pay ratio is under 30%, which is very healthy, and their dividend yield is at 1.72%, which is not too high and not too low, right where I like to see it for my holdings. Unfortunately, Northrop Grumman is down for the past year, and year to date, they're also down pretty heavily, which is not great to see. Though in the past 5 years, they've had some decent performance. I thought I was buying them at a dip when I purchased them at the time, but clearly it was not enough of a dip. I bought them at a pretty high valuation, and because of that, I think I am suffering just a little bit with my returns. But looking at their dividend scorecard, they have some of the best dividend history out of any of the defense contractors, 20 years of dividend growth history, and then 5-year growth rate of 9.29%, which is much stronger than many of their competitors. Their pay ratio is healthy at 31%, and their dividend yield is sitting at 1.9%, which is much lower than Lockheed Martin's. Lastly, we'll take a look at 3M, and we will see a very similar picture to Intel Corporation. In the past year, it's actually up 22%, which is, I guess, nice to see. But if you look at the 5 and 10 year graphs, you can see it doesn't mean much because it was sitting much higher before at $200 per share, and now it is sitting at less than half of that. This company has had several big lawsuits it's had to work through, which has hurt them a lot over the past couple years. Now, before we do end this video, I did want to take a look at my future value calculator. And if you guys want to make your own future value calculator, take a look at this video that I'll pin up here. I show a full tutorial on how to make your own real quick. So my starting principal is my current portfolio value at $39,777. My annual contribution is how much I'm expecting to put into the portfolio each year, which is about $12,000 per year. My dividend yield is what it's currently sitting at, 1.79%. My expected dividend increase I can change based on what I think it's going to grow at. So let's put 7%, just to be on, the moderate to moderately high side. Now, in terms of price appreciation, I am expecting about 9% price appreciation per year. So once I change that, we can see that changes these numbers down here. So after 40 years, I will have $6.6 million worth of portfolio value, of course, taking all these assumptions into effect. Now at that point, the total amount of dividend income I'll be earning per year is $44,000 each year. Now, of course, you could increase this dividend income per year by just investing into higher yielding positions at that point in your career. Basically, if you turn these and invest it into companies that yield 3 or 4%, your dividend income per year will be significantly higher than what I have it as right here. Now, I can also change the dates here to see, let's say, how much it would look like in 20 years. So in 20 years, we'd be still under $1 million. So you can see how quickly that it compounds and how quickly it grows once you get to those bigger numbers. As always, I do hope you guys enjoyed today's video. I know it was longer than I expected, but I do hope you found some use in this video. If you did enjoy it, please leave me a like. It helps me out a ton. And if you haven't subscribed to the channel yet, please do so. I post weekly investing content. Comment down below how much dividend income you received this month. I would love to see. And if you haven't seen my latest video where I talk about a new portfolio milestone I just hit, check it out right here. And if you want to see how much 50 shares of dividend income paid me per month, check out this video right here. Thank you guys for watching, and I will see you in the next one.